Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Friday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, yesterday we got to see some crazy moves on all the US dollar pairs, including gold. After the news, we got to see a big bullish candle on the chart of DXY. As a result, there was massive pressure on gold, Euro USD, GBP USD, and others. And right now you can see that DXY is standing at 101.80. This is the current market price, and DXY is still bullish. So let's get started. US dollar rises as strong data push against dovish policy narrative. Okay, and today also you can see that we have some news coming up, so you need to be careful. There should not be much volatility like yesterday, but yes, there can be a single candle volatility. At least for 1 hour you may see some volatility, so please be careful. Today the JPY pairs will be in focus today. Okay, so dollar index. So right now dollar index is extremely bullish, but we cannot deny the fact that the overall DXY is still very much under pressure. If you look at the overall trend of DXY, then obviously there should not be any doubt in your mind that DXY is still under pressure, because the high made by DXY was around 114.80 and right now it is standing at 101. So if you're a positional trader, if you're a swing trader, then obviously the market is still in downtrend. There is no doubt about it. But if you're a day trader, if you like day trading, if you prefer scalping, then obviously you need to consider the present trend of the market here. And to continue the upside, to go for a trend reversal, DXY needs to cross 102 level. Then only we will get the confirmation that yes, buyers are trying their best to take the market up. So the 102 is a very important critical level for DXY. If DXY really wants to take the market up, it will have to cross 102 with good volume. And during the day, if DXY shows correction, then the first level will be 101.28, 101.28, then 100.95. These are the two retracement level where you can expect the market to take support and bounce. Why I'm telling you these levels? So that you can plan your trades accordingly. Because if market bounces from 100.95, 101.28, obviously you'll get to see pressure on the chart of gold. So these are the two retracement level. If you see that volatility of the market is not very high, volatility plays a very dominant role in the market. If you see that market is not very volatile, the market is going for correction, then you can look for a retracement around this area. And if market shows deeper correction, big correction, then you have support around 100.70. This is the best support for the day, 100.70 on DXY. Now let's talk about gold. So after the massive fall yesterday, obviously the levels are not very strong right now. Okay. And after any volatility, okay, you should not trust the levels blindly. Today also you need to be careful. As you can see right now that the gold after the low of 1942.43, gold is trying to recover, and surprisingly gold also showed a recovery of more than 100 pips. Okay, right now standing at 1952. So if the upside on gold continues, then observe the market around 1957 to 1958. This is the first retracement level where you can expect the sellers to be present. If you see market struggling around this area and if market reverses, you can look for a sell position. It can be 1956 also, because see, market work as zones in a market, not as a line. If you have been trading for a couple of months, then you must be knowing that these levels work as zones in the market. Okay, so if you see market reversing from this area here, you can look for a sell position. But on the other hand, if you see the market is going up, market is standing at 1957 with a big green candle, obviously you need to use your common sense, because trading and common sense go side by side. It will not work. In that case, you need to wait for the market to hit the next resistance of 1962. 1962 is the second resistance. Previous support will be acting as resistance. Then we have moving averages, the 100 moving average, 50 moving average, and if I draw Fibo here, you can see we also have Fibo 50% retracement level. If we combine all the factors, 62, 63 seems to be a better level to take a sell position. If market reverses, if you see price rejection from above, you can go for a sell. You can expect a profit of 40, 50 pips. Clear? And on the other hand, if market shows downside, okay, if market shows downside, we have layers of support. The first support will be around 1940. All these are medium support, not very strong support that can reverse the trend of the market. See, not all the levels in the market have equal strength. I always say, so these are the levels where you can expect a good bounce, not a trend reversal. Okay, so 1940 is the first support. Then we have support around 1934, and then we have support around 1929. These are the three support levels on the chart of gold right now, where you can expect the market to bounce. If you see market taking support and bouncing from these levels, you can go for look for a buy position of 40-50 pips again. So today 40-50 pips market. Okay, if you're wondering why we are considering these levels here, then I'll have to draw Fibo here. You can see market has previously respected our Fibo levels when we are drawing the Fibo from the lowest point of the chart. Yesterday market was extremely volatile, so it did not respect. Quite cool. Okay, so the next support on the chart is around 1940. 1940 is also the previous resistance here, previous high. So 1940 is the first level, okay, being the Fibo 50% retracement level. And you can see here 1929 is the Fibo 61.8% retracement level. And here we can also see previous support, previous price rejection around this area. So 1929 seems to be a very good level, and then 1940 seems to be also looks like a good level on the chart of gold when we are drawing Fibo from the lowest point of the chart. But yesterday market made the low here. So I was trying to figure out, okay, why market bounced from 1940 to 43 level, and to be honest, I'm not very sure. Okay, but still here I can see that when I'm changing the low here, I'm also getting another support around 1934 level, and 1934 is a level from where market has bounced previously. As a result, okay, 1934 also has the potential of acting as a support for the day. That's why we are considering three support levels: 1940, 34, and 1929. If the volatility of the market remains like this, if you see market taking support, you can go for a buy. But in case the heavy sell continues, obviously you need to follow the trend of the market. No level is permanent. Respect your capital, protect your capital in that case. This is my analysis. I can be wrong as well, so please follow proper risk management. Do not gamble with your hard-earned money. Okay, bye bye, take care.